The SFP indicator, known for its simplicity and its accurate predictiveness of the markets. Even by itself, this indicator can be pretty decent. I mean, look at this. Whenever there is a bullish swing failure pattern, like here, we take a long position. On the other hand, whenever there is a bearish swing failure pattern, we take a short position. But what if we added an extra technical analysis tool to this indicator to filter out the majority of the false signals that it may produce? Would we be able to create a decently profitable strategy? Well, that's the whole point of this video, so stick around because it's gonna be a wild ride. Let's get into it. So this is the indicator that we've been talking about. It's called Swing Failure Pattern, created by LuxAlgo. To add it to your chart, you want to go to TradingView and then load any trading security that you like in any time frame. For me, I'm going to be using the 5-minute time frame of GBPJPY. After that, click on Indicators, then type in Swing Failure Pattern, and it's going to be this one by LuxAlgo. Now, the Swing Failure Pattern, or SFP Indicator by LuxAlgo, is a technical analysis tool designed to help traders identify potential trend reversal points by highlighting specific patterns on the chart. So like here, this was a bearish trend, and then down here we had a bullish swing failure pattern, as indicated by the indicator. Immediately after the pattern was formed, the market did a trend reversal to the upside. Same thing happened here. We had a bullish trend and then a bearish swing failure pattern was printed. Soon after, a trend reversal to the downside. Now, at this point in time, I found myself thinking,
but what exactly is a swing failure pattern?
Well, a swing failure pattern occurs when the candle wicks of the price move beyond a recent swing high or a swing low, but then ends up closing back within the previous range. To understand this better, it's actually really simple. Let me show you. So like here, this was a swing low, and then looking at this candle, it did push below the swing low with the wick, and then came back up and closed above the swing low. This is a bullish swing failure pattern. And then here we had a swing high, and then a few candles later, this candle pushed beyond the swing high, but only with a wick. It eventually came back down and closed under the swing high. This is a bearish swing failure pattern. So basically, a swing failure pattern happens when the price fails to break beyond a swing high or a swing low. This behavior suggests that significant market participants are engineering market liquidity, often indicating potential trend reversals. Now, how do we use this indicator to trade? Well, it's as indicated in the beginning of this video. Whenever there is a bullish swing failure pattern, we want to take long positions. Conversely, whenever there is a bearish swing failure pattern, we want to take short positions. But of course, we can't just rely on this indicator alone for our trading, because as you can see, not every swing failure pattern results in a profitable trade. Now, in order to filter out the majority of these false signals and craft a strategy that has a chance at being profitable, we have to add one more indicator to our chart. And on top of that, we will also combine the two indicators with a single price action concept to craft our strategy. But before we do that, let's talk about the forex broker that you can actually use to trade with this strategy if we find it to be profitable. That broker is hankotrade. Now, I've been using hankotrade for quite some time. As you can see here, this is my live account on hankotrade's web trader platform. The reason why I think hankotrade is a great broker is because of their low commissions and spreads. On forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of us who love high leverage, well, hankotrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,000, they're going to give you a bonus of $3,000, giving you a total of $6,000 to trade with. To access the bonus as well as all the other perks, well, sign up to hankotrade using the link in the video description. Now, back to the video. Now, let's add the complementary indicator that we need. On the indicator search tab, you want to type in 7EMA_5MA. This is actually a really good trend indicator. I've used it in some of our videos before. Now, it looks a bit messy, but you just want to double click on it so we can change some settings. So we just want to keep the first 4 EMAs, which means we want to disable all this, basically from EMA 5 all the way to the bottom. And then on the Inputs tab, we want to change the length of these 4 EMAs. The first one should have a length of 8, followed by 13 for EMA 2, 21 for EMA 3, and 34 for EMA 4. Now, for the colors, you want to choose whatever color combination that you need. For me, I normally go with red for the first EMA, yellow for the second EMA, light blue for the third EMA, and then green for the last EMA. After that, click OK so we can go over the conditions for taking positions. Now, before we explore the entry conditions, these 4 EMAs are actually going to be used to identify the trend. Whenever they're lined up like this, it's a bullish trend. Conversely, whenever they're lined up like this, it's a bearish trend. Now, to take a long position using this strategy, these are the conditions. First, we want to confirm that the market is in a bullish trend. To do that, we're going to be using the 7EMA_5MA indicator. Well, that's a mouthful, but we basically want to use these 4 EMAs right here. We're looking for them to be aligned in this manner to indicate that the trend is bullish. Now, once we have that, we're going to be looking for our second condition, which is to identify a swing failure pattern that's happening within this bullish trend. We're going to be using the Lux Algo SFP indicator for that. This is our pattern right here, and as you can see, the indicator is also going to print an upward arrow like this on a candle that closes above the most recent swing high. This candle, as indicated by this arrow, is going to be our entry candle. Now, the last condition is we need to add a simple price action concept of breaks and retests. So the way we're going to do that is we want the most recent swing low to be a retest of the most recent resistance level. Now, where is our resistance level? If we look to the left of the chart, this is a resistance level. Extend it to the right using a rectangle tool, and as you can see, the resistance level was broken by the price at this point. And then later, the price did a retest of that level. That retest also happened to be the area where we had this swing failure pattern. All these conditions increase the probability of this becoming a profitable trade. We enter a long position here. The stop loss is going to be put at the most recent swing low. And for the take profit, well, we're going to target a risk-reward ratio of 1 to 1.5. Letting the trade run and take profit. Now, for a short position, we of course want to do the opposite of everything we just did for this long position. Now, the first condition is to confirm that the market is in a bearish trend. We're going to be using the 7EMA_5MA indicator, and we need these 4 EMAs to be lined up like this, with the green one at the top, the red one at the bottom, and then in the middle should be the blue above the yellow. After we have the bearish trend, we need to identify a swing failure pattern happening within that bearish trend. And as you can see, the SFP indicator by Lux Algo printed this SFP label on this candle, which means a swing failure pattern happened right here. Then our last condition is to confirm that this swing failure pattern happened at an area where the price was also retesting a recently broken support level. We'll look to the left. This is our support level. It was broken by the price at this point, and now the price is doing a retest. So having a retest alongside a swing failure pattern within a bearish trend increases the probability of this trade turning out profitable. We enter a short position here. The stop loss goes right at the most recent swing high. And then for the take profit, we're going to target a risk-reward ratio of 1.5. Letting the trade run and take profit. Well, that's basically everything for our strategy. You identify a swing failure pattern. If it's a bullish swing failure pattern, you want it to be happening within a bullish trend. And then you also want it to be happening at the same time that the price is doing a break and a retest of a resistance level. This is a decently profitable strategy. Go ahead and do a backtesting of it to see how profitable it can be over a longer time period. This video is not financial advice, so you obviously do not want to do any risky trades solely based on what you see in this video. Do your own due diligence before trading with your real money. That's basically everything. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.